Hi, my grade 11 students. In the last chapter, we have started financial statement of a sole trader. That time we discussed about the profit and loss statement and statement of financial position, initial introduction of these, right? Last time we calculated gross profit. Do you remember? I think remember all. To calculate gross profit, we consider about cost of sales and sales income. From the sales income, when you subtract cost of sales, there you can see gross profit. If your sales income is more than cost of sales, there you can see gross profit. Sometime you may earn gross loss. That time, cost of sales is high, cost of sales is more than sales income, then you earn gross loss. These are the things we have done in the last chapter. Today, I will continue how to calculate net profit, right? First, we go to the first activity. The income and the cost of sales relating to a business for a given accounting period are given below. Cash sales 70,000, credit sales 48,000. Remember this, sales include cash sales and credit sales both. Sales include cash sales and credit sales both. Sales means this everything. Everything means cash sales and credit sales. You have to add, then total sales is sales. When we calculate gross profit, we consider not only cash sales, credit sales also. Cost of sales are given. Sales income minus cost of sales. Sales income, I put here sales. And if you know cost of sales, then you can see what? Gross profit. Gross profit. After that, they have given in this question dividends income, rent income, discount received and interest income. These are the other income, right? Especially trade-in part of the profit and loss statement. What do you mean by trade-in part? Trade-in part means where you record sales and purchase related expenses. On the top of the profit and loss statement, we find gross profit. Where you calculate the gross profit, that part is generally we say trade-in part, right? Trade-in account. It is the top of the profit and loss statement. Top part of the profit and loss statement is known as trade-in account, right? Now, after the trade-in account means after we calculate gross profit, the other place under the gross profit, we write all other income generated by the business, all other income. Not only through sales related activities, you as a businessman, you may have different income. Sometimes you may invest your money in the share market. From that you can earn income. We call for this dividends income. What is that? Dividends income. The income is generated from the share market. We say what? Dividends income. Sometimes you may deposit your money in the fixed deposit or in the savings account in the bank. From that, you can earn income, interest income. It is additional income. These all are additional income, right? Then sometime you may rent out your building to someone. From that, you can earn what? Rent income. They are the other income. After the gross profit, the next place is other income place. All other income, no place to record. The place is under the gross profit. What are the other income? Dividends income, interest income, commission income, rent income, like that. All other income we have to write under the gross profit, right? Now, the question asks this, calculate the gross profit or gross loss of a business. The total of other income generated. Okay, total other income, what are they? Using this part means not dividends income area, right? It should go under the cost of sales, this part, right? There are three items, no? What are the three items? Cash sales, credit sales, mean sales, cost of sales, right? From this detail, we can find gross profit or gross loss, we'll see, right? All other income, you see, dividends income, other income, rent income, other income, discount received, other income, interest income, other income. They separately are total other income and gross profit or gross loss of the business. Now, we'll see how to do the question, right? Now, I use total sales. How do you calculate total sales? Remember this, right? Sales. Here, if you want, you can write credit sales and cash sales separately, but there you have to use more space. I think best option is what? If you can write the total sales at once, it's good, right? Now we'll see how much the total sales, cash sales 70,000, credit sales 48,000. The total sales how much? 118,000, right? 118,000. We write here 118,000 sales. From the sales income, you have to subtract. In the last chapter, we have done cost of sales. Then you can see the gross profit, right? Cost of sales are given 52,000. Then you put minus here. Cost of sales, right? How much? 52,000. All the expenses, total of the expenses we put in the brackets, because every time we subtract from that, from the income, right? What you subtract, that value you put in the brackets. Then see here how much the gross profit. Here 0, 0, 0, 8, 2, 8 minus 2, then 6. Here 6. Check answer is correct or wrong, right? Then here you can write what? Gross profit. The first question asks what? Gross profit or gross loss? 66,000 is the gross profit. How? The total sales 118,000. Cost of sales 52,000. Then 118,000 minus 52,000. How much? 66,000. Yes, sales is more than cost of sales. Now we go to the rest part, the part 2, the total of other income generated. Total of other income generated. We'll see. Then here we consider only the total other income. There are dividends income, how much? 5,000, rent income 30,000, discount received 6,000, interest income 7,000, right? We get this total, it is the other income generated, right? Dividends income 5,000. Okay. Dividends income. Dividends income. How much? 5,000. What's the next one? We'll see. Rent income 30,000. Rent income 30,000. Rent income 30,000. Right? Discount received 6,000. Discount received 6,000. Discount received 6,000. Next one. Interest income 7,000. Interest income 7,000. Interest income 7,000. Okay, now we get the total of these. This is the total income generated. See how much, right? Here 0, 0, 0. 7 plus 6, 13. 13 plus 5, 18. Right? Then you put 8 here. Say 1. 3 plus 1, 4. 48,000 is the total other income. Total other income. I think understood well. Right? I think understood well. Here you can see total income generated. Before this we calculated what? Gross profit. How do you calculate it? From sales you subtract cost of sales, right? Now we move to the next one. Calculating net profit. Calculating net profit. Now you know how to calculate gross profit and how to calculate other income. Now we move to calculating net profit or net loss. Net profit or net loss should be calculated after calculation of gross profit or gross loss. Yes, remember, before you calculate the net profit or net loss, we must calculate gross profit or gross loss of a business. Right? Without calculating gross profit or gross loss, you can't calculate net profit or net loss. That's why at the beginning we have found the method how to calculate gross profit or gross loss. How? From the sales income you subtract cost of sales, then you can find gross profit or gross loss. After that, are there any other income in the business? Under the gross profit we write one by one, and we know now how to calculate other income also. Now we move to calculate net profit. Income. Increase in of equity except due to the owner's investment. Increase in of equity except due to the owner's investment. Remember this. You know, in grade 10 under the accounting equation lesson, there are main 4 points, 4 factors which are affected on equity. You have learned, I think you remember very well this everything, but I revise you the theory part. Remember, there are main 4 factors which are affected on equity. Remember this. When owner invest resources. Where? To the business, right? When owner invests resources to the business, what happened to the equity? What happened to equity? Equity goes up. Equity increases, right? Equity increases. When owner invests resources to the business, it's okay. But the opposite thing is this. When owner withdraw resources from the business, not the invest, but withdraw resources. We generally say drawings, no? Drawings, right? When owner withdraw, right? Withdraw resources, equity what happened? To the same thing, equity decreases. If arrow keys goes down, means decreases. When arrow keys goes up, equity increases, right? Now, these are the two things. Then remember, when the business earn income, when the business, I use BZ is okay, no? BZ, but you can't use, but here, right? Business earn income, when the business earn income, what happened equity? Equity increases. You have learned this everything in grade 10. When business pay expenses, earns, right? Pays expenses, equity what happened? See, equity decreases. There are main 4 factors which are affected on equity. See here, when owner invests resources, when owner invests money, invests any other resources to the business, equity goes up. But the opposite word is when the owner withdraw resources, he take money, right? He withdraw other resources, motor vehicles and computers to their personal use, equity decreases, right? The other one is when the business earn income. Yeah, when the business earn income, equity increases. Why? Business earn income, no? Then equity increases. The other way, business pay expenses, pay water bill, pay electricity bill, pay advertising, pay employee salary. These are the expenses. When the business pays expenses, equity decreases. Right? Now, you remember this everything. Then I move to the income definition. Increasing of equity. Okay, increasing of equity. You know there are 2 points to increase equity. What are they? When owner invests resources from the business to the business, we say equity increases, right? I use another color, then it's easy for you. Now you see here, when owner invests resources to the business, this is the first thing to increase equity. The other one you see here, when business earn income, what happen? Equity increases. There are only 2 out of this which are affected to increase the equity, right? When owner invests resources, what happen? Equity increases, okay. When the business earns income, equity increases. Now you remember, increasing of equity except due to the owner's investment. It says you cut this one, right? You cut this one. Why? Except due to the owner's investment. This is owner's investment, no? Only one thing we have now. What is that? When business earns income, equity increases. Now you remember the definition for income. What is this? Increasing of equity except due to the owner's investment. Increasing of equity except due to the owner's investment. Without any investment, if your equity increases, then it means what? Income. It means income. Now the next one. Expenses. Decreasing of equity except due to the drawings. Yeah, we go back now. There are 2 points. There are 2 factors which are affected to reduce your equity, to decrease your equity. What are they? These 2 finish, no? These 2 connected with the income, right? But the remaining 2, right? May I use another color? Right? Then you can understand well. I use blue color, right? Right. Now, when owner withdraw, this one, when owner withdraw resources, we generally say drawings. As a result of drawings, equity decreases, right? And the other way, when the business pays expenses, that time also equity decreases. There are 2 points, right? But in the definition, they say decreasing of equity except due to the drawings. You know, there are 2 methods to reduce your equity, to decrease your equity. One is drawings. The other one is expense. It says your equity decreases, but no impact drawings. no drawing impact, then definitely it should be what? Expense. See here, when owner withdraw resources, equity decreases. But when we give the definition, we say no, not the drawings. Then what is that? It is the paying expense. Right? Now, I think understood. Decrease in of equity except due to drawings. There are meant for expenses. Now, remember, all the expenses in the business we can classify it into meant for categories. Meant for categories. Right? Now, you know what is an income, what is an expense. Right? But here we don't classify income. We classify only expenses. There are meant for expenses categories. What are they? First one is distributing expense. Distributing expense, right? Distributing expense. Distributing expenses means expenses which are connected with distributing activities, sales promotional activities. For an example, we can give advertising expense. Advertising expense. Actually, advertising will give support to promote the sales, to promote the distributing part. Right? You may think this example. Remember, some famous companies, they recruited different employees as sales executives. Actually, those employees sell the company's product. They are traveling door to door and they talk to individual customers and they try to sell their product. The company pays their salary on the number of items they sold. Actually, it's like a commission. If they sell one product, the company gives a commission for that employee. The employee who can sell more number of units within one day, so that employee can more income from the company. Right? So it is called just commission. The company give a commission to the sellers. Right? It's a sales strategy to promote their sales. Then all the employees who got that job opportunity, they try to sell more and more quantities within one day. Right? Viewpoint of the businessman, it's their commission, give an expense, right? Commission for sellers, right? It comes under the distributing expense category. Right? Advertising. Distributing expenses, all other distributing expenses. Bad debts. I think you know the bad debts. I'll explain it. Bad debts is created as a result of credit sales. As a result of credit sales. How bad debts is created? Remember this? If you are a businessman, you can sell goods on cash basis also. You can sell goods on credit basis. Right? If you do cash sales and credit sales, you can earn more income than the business, those who do only cash sales. Right? If you do cash sales and credit sales both, you can earn more income than the businesses, those who do only cash sales. Why? Because the people who don't have money, but they also come to your business. Why? You sell goods on credit basis also. From that, you can collect money later, but you can earn profit, no? Right? But the problem is this. After selling goods on credit basis, remember, you create a debtor. You create a debtor. You want to collect money later. Some out of these debtors are unable to pay their payments due to some fair reasons. Then what you have to do? You have to bear that loss. That is called bad debts. What is that? Bad debts, not good debts, right? Bad debts. Bad. You know bad? Bad is bad. Bad debts. It is a loss. That loss, that expense also comes under the distributing expense category. You especially remember, first expense category is distributing expense category. There you can write only distributional related expenses, which gives to promote the sales, advertising, bad debts, seller's commission, like that. When we practice 1, 2, 3 questions, you can understand very well, right? Now the second one is administration expense. Administration expense. To conduct a business, you want to pay water bill, you want to pay telephone bill, you want to pay employee salary, you want to pay insurance expenses also. Remember, these expenses specially we classify connected with administration activities, administration related activities. They never give direct support to promote sales. Then water bill, electricity bill, but advertising we write under the distributive. Why we advertise? To promote our sales. But you have to pay insurance expense, employee salary, insurance, telephone bills, machinery depreciation. These all the expenses comes under the administration expense category. Right? The next one, other expense. Other expense is the expenses which are not related with distributing and administration related activities. When you think about advertising, it will give big support to promote sales. It goes under the distributing category. When you think about water bill, electricity bill, it never comes under the distributing expense category, where administration related activity, so it comes under the administration expense category. But when I say this, stolen cash, it is loss. Stock damage due to the flood. Now what happened? Can you put these two expenses under the distributing or administration category? No. Then no place to record, so we write under the other expenses category. Stock losses, stolen cash, donation, just we give some donation, right? So these are the other expense category, but expense. The finally, financial expense. Finally, financial, right? Finally, financial. Financial expense category. Financial expenses connected every time with financial related activities. Bank loan interest, financial related activity. Checkbook charges, you have to pay money for checks. Then checkbook charges, bank charges. These all are the expenses connected with financial activity, bank related activities. So they are called what? Financial expenses. Now you know, I'll revise again, I'll give a summary. Distributing means distributing related activities. What are they? Sellers for commission, commission for sellers, commission expenses paid by the business for sellers, right? Sellers commission, like advertising. The other one, administration expense. They are connected with administration related activities, salaries, then water bill, electricity bill, then other expenses, stock losses, stock damages, then financial expense, checkbook charges, bank loan interest, they are the financial expenses, right? These are the meant for classification of expense. Now distributing expense, we'll see expenses that are connected with sales and distributing activities. Yeah, sales and distributing activities. I have given an example here, advertising expense. Advertising expense. I explained one thing before. Do you remember? Bad debts also comes under this. Bad debts. Bad debts. Right? Then, next one, administration expenses. They are connected with the administration related activities. Expenses that are connected with administration related activities. Salaries and wages. Then what else? Water bill. Right? Water bill. What else? Electricity bill. If not electricity expense, right? Remember, these are all the expenses connected with administration related activities, right? These are the examples. Now the next one, other expenses. Expenses that are not connected with administration and distributing expenses. Expenses that are not connected with administration and distributing expenses, right? Stock losses, stolen cash, they are the things. Now the next one, financial expenses. Financial expenses category we can mention here, especially financial related activities, right? Bank loan interest, not the bank loan. Bank loan is a liability, right? Here we can write only what? Income and expenses, no? You never mention bank loan here. Bank loan interest, checkbook charges, right? Bank charges, they are the expenses, right? Then expenses that are connected with financial related activities, bank loan interest expense, right? Now activity 3. I think you understood well. Then we can practice this activity. Then you can understand how to classify all the expenses, right? Now, you know, bad debts. I put D to indicate distributing expense. I put A to indicate administration expense, right? I put F to indicate financial expenses. I put O to indicate other expenses, right? We'll see. Bad debts, tell where it goes. Distributing, administration, financial, or other expenses. You know, bad debts. 2-3 times I repeated the same thing. It goes under the distributing. Then bad debts comes under the D. D means distributing, right? Advertising. Advertising also comes under the distributing. Interest expense for bank loan. Where? Distributing, administration, financial, other. Where? Interest expense for bank loan. Where? Financial. I skip one. What is the? Salaries for salespersons. Salaries for salesperson. You remember I explained using an example, right? The salary, not just salary. Salaries and wages comes under the administration. But salaries, especially to whom? To salespersons. Then it goes under the distributing. Right? Electricity expense, where? Electricity, water bill, insurance, administration, right? Administration. Then discount allowed. We allow the discount. Why we give the discount? To promote our sales. We allow the discount. Where we put? Distributing expense category. Then depreciation of distribution vehicle. Depreciation means when we use non-current assets, their value decreased. We can measure using monetary value how much the value of the decreased. So it is called what? Depreciation. Especially here, depreciation of the distribution vehicle. The vehicle that we use to distribute goods, that vehicle was depreciated. Then it comes under the distributing expense category. I put here, right? Distributing expense. Then stationery expense. Stationery, to conduct our internal operation, administration activities, we had to use some stationeries, right? So that one comes under the administration, AD, right? Then insurance expense. Insurance, that one also administration expense, right? Then bank charges, you know, financial expense. Rent payment, administration expense, right? Losses from cash frauds, where? Financial or other, right? Where? Financial or other. It comes other, right? Other. I think only one expense which comes under the other expense category, it is losses from cash frauds, right? I think you can write down. If you have a textbook, you can keep it with you, and you can classify these expenses in which category, right? It's easy if you can draw this kind of table in your writing book, copy the table, same kind of table in your writing book, and you can put these items to the relevant expenses category. Now, the other activity. The following details were extracted from the business of Timira for the year ended 31st December 2020. 31st December 2020. Okay. They have given directly what? Gross profit. Right? Gross profit is given 230,000. You know, after the gross profit, we have to write, if they have given other income, we have to write. Then say discount receipts is given, commission income also given, interest income also given, right? These all are the income. These all are income. These 1, 2, 3. These 3 income we write after the gross profit. Then you can find total income, not total other income, total income. Total income include gross profit and other income, everything. Only the total other income without gross profit, we can get only these 3, right? Then insurance expense, administration salary, building repair expense, advertising, seller's salary, bank loan interest, and stolen cash. There are a lot of expenses, right? Now, using these expenses, the simple theory is from the total income, if you can subtract total expense, then you can see the net profit. But the problem is, when you write any expense, you must write them in each expense category, right? Before we do the question, it's easy if you can classify, right? You take the pencil now and you keep your textbook, and in front of the each item you put by pencil all the expenses are going to which category? Administration, distributing, financial, or other expense category, right? If you can classify them before we do the question, it's easy for you when you do the question. Insurance expense, where? Administration. Administration salary also administration. What else? Building repair expense, administration, right? Advertising, where? Distributing expense. Seller's salary, where? Distributing expense. Bank loan interest, financial expense, right? Stolen cash, other expense. Now, it's very easy to do the question, right? Now, we'll see how to do. Right? Now, here I can do the question. It's better if you can draw some lines. Right? Now, on the top, what we write? Gross profit. Gross profit. How much? Gross profit, they have given 230,000. We put it here. Then other income, right? Other income, we can write other income under the gross profit, other income. I think you are doing with me, right? Then what are the other income? I mark them: received discount, commission income, interest income. Then you can write received discount. Received discount. Received discount. How much? 12,000. Why we put in the first column? Because this first column we can use to get the total of the income category, right? Total of the income we can write one by one, and the total income we bring to the second column. If you write one by one income here, it's easy to get the total, right? Then commission income. Commission income. Commission income. Right? Commission income 5,000. 5,000. Now interest income. Only there are three income. Interest income. Right? Interest income 8,000. Now you get the total income. Here 12 plus 5 plus 8. Then how much? 25,000. 25,000. Now what you do? This is a gross profit. This is the other income. We have to add these two. We have to add this all. Then how much? 255,000. Then you can write expenses under this, right? Then all the expenses we write one by one, and we get the total to the next column, right? If you want, you can use here 3 columns, but first time I use only 2 columns. If I take at the beginning 3 columns, it's confusing you, so I use 2 columns because this is the first question. The next time we can use 3 columns. I'll teach you how to manage 3 columns. Okay. Then you can classify all the expenses in 4 categories. First one should be distributing expense. Distributing expense. I put distri expense. It means distributing expense, right? The other one should be what? Administration expense. Administration expense. Administration expense, right? Then the other one, financial expense. Financial expense, right? The other one, other expense. The other one is other expense, right? Other one is other expense. Yeah. Now you can pick one by one the details from the question, right? What is the first one? First one is insurance expense 16,000. Where we put insurance expense? Where we put insurance expense? Right. Insurance administration, right? Insurance administration. Right? Insurance administration. How much? 16,000. Okay. Next one, administration salary also comes under the administration. Administration salary. How much? 32,000. Okay. Next one, building repair expense also comes here, right? Building repair expense. Where? 45,000 comes under the administration. Okay. Next, advertising 30,000 distributing. Advertising. $30,000. We put it here. You have to do with me, right? Now, seller's salary. Seller's salary. Seller's salary. How much? 24,000. It comes under the distributing, right? Next one, bank loan interest 12,000 financial. Bank loan interest. Bank loan interest 12,000. Last one, stolen cash. Stolen cash, right? Stolen cash 8,000, right? Stolen cash 8,000. Stolen cash 8,000, right? Stolen cash 8,000. Then we have to expand the columns like this because we have to manage the space. Remember this. Actually, if we have used 3 columns here, one by one all the expenses we can write in the first column. Total of the each heading we can bring to the second column, right? Then each of the second column total we bring to the third column. Then from the total income you can subtract total expense. Then there you can see the net profit or net loss. We have entered all the details here. Now you know here we can see distributing expense. There are 2, advertising and seller's salary, right? Then we can get the total here. We can get the total to the second column, right? But here only there are 2 columns, no? So we can get the total of the everything to the next column, right? If you want, we can bring, because this is the first activity, no? Then we can bring the total of the each item to the second column. Here 54,000, right? You put in the brackets because all the expenses we have to subtract, so we put them into the brackets, right? Here, how much the total? Here 3,000, 0, 0, 0. Then 5 plus 2, 7 plus 6, 13. Then 3 we put here, 1 save. Then 93,000, right? Now here 12,000, right? Put in the brackets. This one also put in the brackets. Then here 8,000, right? 8,000. We bring to the next column, right? Now you can see the total expenses, right? Total expenses here 12,000, 8,000, how much? 20,000, right? Then 20,000 plus 93,000 and 54,000. These are the total expenses, right? Now we put it here 54,000, here 93,000, right? These two 20,000, now we put 20,000. We can find the total of these. Then 0, 0, 0, 7. Then 167,000 is the total expenses, right? Now you can see on the top, you can see total income. How much? 255,000, right? Then what you do? From 255,000, you can, from 255,000, these are the total income. 167,000 is the total expenses. Then you know the theory is this, what? From the total income, you have to minus total expenses, right? Then you can see the net profit. Here 0, 0, 0, 8. Here also 8. Then how much? Net profit is 88,000. In front of this, you can write net profit. Right? Remember this? Actually, here I used only 2 columns. Right? Mainly we use, when we practice next question, we can use 3 columns. If you use 3 columns, it's very easy for you. Why? One by one, all expenses you can write in the first column. Then each total you can bring to the second column. Then in the second column, you can see only the total of the each heading, right? Each head expense. Head expense means administration total, distributing total, financial total, and other expense total, right? Then after that, we add these total 4 expense and final total answer we bring to the third column. Then in the third column, you can see only total expense and total income. Then from the total income, you can subtract total expense. Then you can see the net profit. This is the way. I think you can write down this one, right? Right? This is the answer. Now we can move to the next activity. Before we go to the other activity, it's better to understand the format of the profit and loss statement. You can see it here. The simple concept to try to understand how to calculate net profit. Remember, there are 2 documents to be prepared by a business to complete their financial statement. One is profit and loss statement. The other one is statement of financial position. Still, we are discussing about the profit and loss statement. In the profit and loss statement, we can find net profit or net loss. Profit and loss statement we can break into 2 parts, calculating gross profit part and calculating net profit part. Now you know, in the last chapter we have practiced how to calculate gross profit. To calculate gross profit, we need sales income and cost of sales. From the sales income, you can subtract cost of sales, then you can see the gross profit. After the gross profit, you know, all the income we can write under the gross profit, then we can add this everything, then total income is found. From the total income, the simple concept is income minus expense. From the total income, you can minus, you can subtract total expense, then you can see the net profit. But here, all the expenses we can classify it into main 4 categories. One is distributing expense. The other one is administration expense. The other one is financial. The other one is other expense, right? When we draw profit and loss statement, you must remember we have to classify these all expenses under main 4 expenses categories, right? Now, this is the summary of the profit and loss statement. You can see on the top here sales, right? Here we put sales. Now I told you before there are 3 columns. Sales we put to the corner, right? After that you can see the cost of sales we have done in the last chapter, right? From the cost of sales is here. Remember, partly I explain later. Now in this slide I'll give a summary. Then total sales, then total expense. Expense means cost of goods sold, right? Cost of sales. Then you can see the gross profit. This is the gross profit, right? Then this is what? All other income. Then total of other income here, right? Then this is number 2, what? Other income total. Then what you do? First and 2 we plus add. Then you can see the total income. This is the one kind of expense, one type of expense, the other type of expense, the other type of expense, the finally financial expense. This everything are what? Expenses. Expenses. right? From the total income, it means 1 and 2 plus that from this total we subtract this total expense, then you can see the net profit. Actually, you can't see these everything clearly, so I move to the next slide. I explain partly all the details, right? Now here, first one we record sales, right? Now sales, it goes corner. You can see it clearly. Then you know cost of sales. How to calculate cost of sales? Opening stock. Then purchase. And then purchase related expenses. There are how many? 2. Loading charges and garage inventories. Not only that, import tax and all other purchase related expense to be added to the purchase. Before you subtract closing stock, the answer is called cost of goods to be sold. Cost of goods to be sold. Cost of goods to be sold. Right? Then we can subtract closing stock. There you can see what? Cost of sales. Right? Cost of sales. Then this is a closing stock. Then cost of sales is this. Right? Cost of COS. Cost of, this is sales. Then sales minus cost of sales. Then you can see the gross profit. I taught you before, after the gross profit, what we can write. Do you remember? What we write after the gross profit? Other income. Other income. Right? What are the other income? Rent income, interest income, discount received, and house rent income. All other income, no place to record, only one place we have, it is the other income place. Right? One by one we write, then this is a total income. Right? Total other income, then gross profit plus other income is what? Total income. Total income. I think you understood well. Understood or not? Right? Now, next one. Expenses. Income part finish. Right? Sales. Subtract cost of sales. Then you can see the gross profit. After the gross profit, we write all other income plus gross profit, the total we write. From that answer, we subtract total expenses. But you know, total expenses here we have to classify under main 4 categories. At distributing expenses, administration expenses, other expenses, finance expenses, financial expenses. Finance expenses, right? You can see textbook. Actually, here I presented in this slide. Textbook same the details mentioned in the textbook, right? If you can't see this clearly, you can use your textbook, right? Now, distributing advertising expenses, right? Salaries for salespersons, discount given, bad debts, right? Depreciation for distribution vehicle. These kind of distributing related expenses are recorded under the distributing expense category, right? One by one their values we put here, but the total we bring to the second column. In the second column you can see only the total of the each expenses, right? Now the second one is administration expenses. Under the administration expense category, we write only the expenses which are connected with administration related activities, right? What are they? Electricity expense, insurance charges, salaries and administration, telephone expenses, depreciation for machinery, depreciation for furniture, depreciation computer, right? Especially only the distributing vehicle depreciation comes under the distributing expense category. All other non-current assets depreciation we write under the administration expenses, not the distribution, administration expenses, right? Then other expenses, losses from frauds, stocks written off, right? If you want, you can put donation, stock losses. These are the expenses which comes under the other expenses category, right? The other one, their values also we write in the first column one by one. The total goes to the second column. Here also one by one their expenses we write in the first column. Then total we bring to the second column. Now the next one, interest on bank loan, interest on bank overdraft. You know bank overdraft, bank charges, right? These all the expenses comes under the finance expense category. Their values also we write one by one. Try to understand this simple concept, right? Then each heading total we bring to the third column. On the top you can see the total income, down you can see the total expense, then you can see what? Net profit. Net profit, right? There's a trial balance. In this trial balance indicate all the details regarding the business, right? A trial balance of the Navisha's business is given below. Stock 8,000, purchase 145,000, carriage inward expense 6,000, load-in expense 3,000, sales for 56,000, fixed deposit 40,000, interest income on fixed deposit 4,000, right? Machinery and equipment 140,000, discount received 7,000, right? Discount given 6,000, insurance charges 8,000, stationery expense 5,000, sales promotional expense 20,000, salaries to salesperson 36,000, rent expense 30,000, trade debtors 50,000, bad debts 2,000, cash balance 68,000, bank overdraft 20,000, bank loan at cost 10%, 60,000, interest on bank loan 6,000, interest on bank overdraft 1,000, capital is given 20,000. When I read this one, actually you can see here not only income and expenses, you can see some liabilities, you can see some assets here. Finally, they have given capital, means equity. But still we are discussing about profit and loss statement. To draw the profit and loss statement, we consider only income and expenses, right? Even though they have given assets, liabilities and equity, in this trial balance, we pick only income and expenses, right? Before you do the question, you must do this thing. You have to classify all income and expenses here. After that, it's easy for you to do this activity in your writing book, right? Now, stock as at 1st of January. Remember, this is called opening stock. You take a pencil and you mark with me this everything where you have to write them when you do the profit and loss statement, right? You have to practice this one at home, but I give here classification. After giving the classification, you can do this one at home, right? Now, cost of sales. Why I put cost of sales? Cost of sales, right? Cost of sales. Cost of sales means to calculate cost of sales, we need opening stock. Purchase also we take for what? To calculate cost of sales. Carriage inwards also to calculate cost of sales, we have to add to the purchase. Loading charges, cost of sales. Sales, where we put on the top of the TOP. Top means on the top of the profit and loss statement we write, right? Then fixed deposit. Fixed deposit is just the asset. We neglect it, right? Then interest income on fixed deposit, where we write other income. Other income. After the gross profit. Machine and equipment do you take? No, it's an asset. Discount received, other income, right? Discount given, we give the discount. Distributing expense. Distributing expense, right? Insurance charges, administration. Administration. Stationery expense, administration, right? Sales promotional expense, where? Sales promotional expense. Distributing. I use this area, right? Salaries to sales personnel, then distributing. Rent expense, administration, right? Trade debtors, debtor is an asset, so you don't take it, right? Then bad debts, distributing expense, right? Distributing expense. Cash balance is an asset. Overdraft, liability, so you don't take it. Bank loan also we don't take. Interest on bank loan, where? Financial expense, right? Interest on bank overdraft also financial expense. Last one is capital. Capital is equity. Equity we don't take to prepare profit and loss statement. So I have given this classification. Using these only income and expenses, you can prepare profit and loss statement by yourself, right? Okay. Now next one. Following figures has been extracted from the business of Mali for the year ended 31st December any year, right? Any year you can put. The capital is given how much? 300,000. Everyone take a pencil and mark this each item where we put when you draw the profit and loss statement, right? Remember capital we don't take. Why? Because capital is capital, equity. Sales, like top means profit and loss statement, top we put. Discount received, where? Other income, right? Bank loan, do we take bank loan? Bank loan is a liability. Say, no, we don't take. Stock as at 1st of January, it means opening stock, where you put to calculate what? Cost of sales, right? Cost of COS. Commission income, where we put all other income. After the gross profit, other income, right? Other income. Now purchase. Purchase also we use to calculate cost of sales. Carriage inwards. We add to the purchase, it means cost of sales. Fixed deposit. Fixed deposit do you take? No. Asset, we don't take. Insurance expense, administration, right? Fixed deposit income. Other income. Now we move to the other side. Discount given, distributing expense, right? Bad debts also distributing expense. You remember, several times I explained this. Administrative salary, administration expense. Sales promotional expense, distributing. Interest expense on bank loan, financial expense, right? Bank charges, where? Financial expense, right? Then trade debtors, do you take them? No, we don't take because it's an asset. Building asset we don't take. Stationery expense, administration expense, right? Cash balance do you take? No, asset. Losses from cash frauds, then where? It goes under the other expense category. Now they ask this, calculate the following separately. What they ask? Cost of sales they ask. Gross profit they ask. They ask other income. Distributing expenses separately they ask, right? Administration expenses total they ask, right? Other expenses they ask. Financial and net profit finally they ask. They ask the 8 items separately. Finally they ask, prepare profit or loss statement for the year ended 31st December 20, the same year, right? Now you remember this. It's better if you can count how many administration expenses, how many distributing expenses, how many financial expenses, and how many other expenses. Right? Now, everyone take your ruler and pen to draw profit and loss statement. Then we write each headings and we give spaces to write expenses. Finally, we enter the details to the format. Then finally, we can find net profit. Are you ready? Right. Now, I'll draw format. You use 3 columns right here. It's easy for you when you get the calculation, right? On the top you write rupees. Actually, on the top you have to write the name of the business, name of the accountant, time period. Right? So, you write name of the business. What is the business name? Extracted from Mali's business, no? Yeah, Mali business. Right? Year ended 31st December. Right, okay. Now, here you write Mali business. Mali business, right? Mali business. I use short words here. BZ mean business. But you don't write BZ, right? You write business, right? Mali's business, right? What is the account we are going to draw now? Profit and loss statement, right? Mali's business, profit and loss statement. You mention profit and loss statement. You have to write long word, right? Here I put only P and L. Profit and loss statement, right? What is the year ended? When it finishes? 31st December. Yeah, 31st December 2020 or 2019 like, right? Then year ended. Year ended when 31st December 20 blah, right? Blah means like they put crosses, no? So we put crosses. Now you remember, actually on the top of the profit and loss statement, what we write? On the top of the profit and loss statement, what we write? We write sales. After that, what we write? You must remember this everything. Cost of sales. Okay. Then if you want, you can underline here, right? How to calculate cost of sales? You know that. Opening stock, purchase and purchase related expenses. After that, we give space to get the total. From that total, we subtract closing stock. Then you can see the cost of sales, right? Then here, don't put values, but you arrange the space open in stock. Open in stock. Now what you put here? Plus purchase. Purchase, right? Now you check the question why. You have to consider here how many expenses that is connected with the purchase. It means loading charges, carriage inwards, import tax. We have to count how many expenses are given in the question, right? Here carriage inwards is here, right? Check, are there any other purchase related expenses? No. Then we write here only one, what? Carriage inwards, right? Carriage inwards, right? After that we add this all, then from that we minus what? Closing stock. After the closing stock, you know, you can find what? Cost of sales. Then sales is in the given, was given. Then after the closing stock, you can see the cost of sale. Then you can write what? Gross profit. Gross profit. Then what you write? Other income. Other income. You underline here because it's like a heading. Under the other income, we can write interest income, house rent income, commission income, all other income. Here, you can check how many other income are given, right? Then you classified it. No, commission income is 1. Then fixed deposit income is 2. Are there any other? Only 2, right? So you give 2 lines and we can find the total income. Okay. Then you can expand the same format to record the expenses. So I draw expenses classification now, right? Then here you can expand the same columns down, right? You have to expand the same column down like this. Tell me now actually how many expenses to be write here? How many expenses? We have to write, what are they? First one is distributing expense. Distributing expense. I put here distributing this expense, right? It's a heading. Then you count how many expenses are there and you give the space here. Then after that administration expense. Then you can count how many expenses are given in this question. You give the space here. Then financial expense. Then you can give, I think I remember only 2 expenses are there, right? Then finally other expenses, right? Other expenses. Now what you do? Then we put the details to the question, the given format, right? Okay. Now what is that? Sales. One by one you can take. Sales where we put 650,000 on the top, right? On the top we can write sales, right? Then sales 650,000, it goes corner, right? It goes to the corner, 650,000. Okay. Now you see the next one. Discount received, where we put other income area. You find where other income here. Discount received. DR means discount received. Check how much. 12,000. You put 12,000 here. Remember, one by one expenses we write in the first column, right? Then next one. Bank loan we don't take. Stock, opening stock 15,000. Opening stock 15,000, we put it here. Opening stock we write in the second column. Why? Purchase we write in the first column and we have to add carriage inwards. Then final answer we bring to the second column, right? Finally we add these two and from that we subtract closing stock. It is the method, right? Okay. Now next one. We have to take taken now this one. Commission income, other income. Where we put? Other income category, right? Other income category, commission income. We write commission income. Commission income. See the amount, 6,000, right? 6,000. Okay. We put under the other income category. Then purchase. Yeah, purchase. It comes under the purchase. Here you see the value how much? Purchase 200,000. 200,000. Purchase 200,000 we put here. Right, next one. Commission income finish, purchase finish. You put the tick after get the detail to the profit and loss statement. It's easy for you, right? Then carriage inwards 5,000. Carriage inwards 5,000, right? Here you put 5,000 under the purchase. Then next one, 10% fixed deposit is an asset, so you don't take it. Asset we don't take. Insurance expense 12,000. Insurance expense 12,000. Right? Insurance expense 12,000. Here you put insurance 12,000. Insurance 12,000. The next one, fixed deposit income, other income. Fixed deposit income, other income. Right? Here, FD income. FD means fixed deposit income. Right? See the value, 6,000. Right? 6,000. Here you put. Then discount given 5,000. Discount given 5,000. Discount given 5,000. It comes in the first column. Bad debts 9,000. Bad debts 9,000. If you forget these items where you put, you can refer textbook format. In the format they have given everything, all the expenses goes under which category. You know, bad debts comes distributed in expense category, right? Now, we have taken this all. Then administrative salary 40,000. Administrative salary, right? You put salary, it's enough, right? Salary 40,000. Okay. Now the next one, sales promotional expense, right? 60,000. Sales promotional expense 60,000. Promotional expense 60,000. Next one. Right? Next one. Interest expense on bank loan 6,000. Interest expense on bank loan 6,000. Interest expense 6,000. Next one. Bank charges 2,000. Bank charges 2,000. Right? Bank charges 2,000. Bank charges 2,000. Right? Next one. Trade debtors we don't take. Building we don't take. Stationery expense 8,000. Stationery expense 8,000. Stationery 8,000. Stationery 8,000. Next one. Cash balance, the finally losses from cash frauds 2000, right? Cash frauds 2000, cash loss 2000. Yeah, remember we have to expand here. Why? We have expand the format. Then we can get the total of the each expenses and we can find the answer, right? Then we go to the sales and those things. Yeah, then we can get the total of these. Opening stock 15,000, then 205,000 here, right? 205,000. Check in the question, have they given closing stock or not given? We can see it. Have they given closing stock? No. What it tells? All the goods purchased have been sold. All the goods have been purchased were sold. It tells no closing stock. Now here you think no closing stock means closing stock is 0, right? Now do the calculation. 205,000, no closing stock. Then you can draw a line here, right? Actually, then so you get the total directly to the third column. Then how much? 205,000 plus 15,000. The total is 220,000. It is the cost of sales, right? On the top, sales income you can see. Down you can see cost of sales. Then you can find the gross profit here. How much? 5 minus 2, then 3, right? 6 minus 2, 4, 30,000, right? Now there are 3 other income, right? Then here 12 plus 6, 18 plus 6, 24, right? 24,000. You had to write these expenses in the second column, right? That method is also correct. Then you can directly bring the answer to the third column. But here in the first column you wrote 3, then we get the total to the second, then draw a line and you bring to the third column 24,000. Then this is the other income, this is the gross profit. Then what you do? You have to add these all. Then see how much? 454,000 is the total income, right? Now what you do? One by one you get the total of the each expenses, right? Right? Now first you get the first expense category, distributing expense category, right? Distributing expense you take now 69,000 plus 5,000. How much? 74,000. Right? Now 12 plus 8, 20,000 plus 40,000. How much? 60,000. Then 6 plus 2,000, 8,000. Then finally only 2,000 is 2,000, right? Now you have to get the total of these. These are the total expenses. 8 plus 2 how much? 10,000, right? Easy method, 10,000. 10,000 plus 60,000 how much? 10,000 plus 60,000 how much? 70,000. 70,000 plus 74,000. 70,000 plus 70,000, 140,000 plus 4,000, 144,000. These are the total expense, right? Then you put 144,000 is the total expense you put in the brackets, right? Then you can find the answer here, right? How? 454 above total income, right? Then 144,000 is the total expense. Then from the total income, you minus total expenses. Then find the answer. 0, 0 and 0. 4 minus 4, 0, right? Then 5 minus 4, 1, right? Then 4 minus 1, 3, right? 310,000 is the net profit. Net profit carried to capital account. CCA, carried to capital account. If not, transferred to the capital account. What is the meaning of this? Remember this, when the business earn income, when the business earn profit, what happened to the equity? What happened to the capital? It goes up, it increases. So after find the net profit, directly we put them into the capital account. That's why we write it here, net profit carried to capital account. I think you all understood well today lesson, right? I think you understood well everything what I have taught today. In the next chapter, we discuss more questions from this lesson, right? Okay, we'll meet in the next chapter. Bye.